Hi, everybody. I am Holly McDonald. I am a realtor here in Costa Mesa. I've been doing real estate for about 15 years now, and I'm so happy you're here to join me for making real estate moves in 2025. It's a new year. There's so much to be excited for, and I know a lot of people set New Year's resolutions and have their goals to start working on their real estate plan for the future, whether you're looking to buy, to sell, to invest, or whatnot. And so, what time is better than now to start planning for those steps this year and just the little things that you can do to make it a reality? So, right now, I'm going to go ahead and share my screen and we'll take a little bit of a deep dive into making your real estate plans for this year. So, hold on one second while I share my screen. Okay, so let's make this session engaging and interactive. There will be a Q&A at the end, and you are more than welcome to throw some comments into the chat, raise your hand, ask some questions. So let's get going. So again, I just introduced myself. I'm Holly McDonald. I have been a realtor here in Orange County, based in Costa Mesa for 15 years. I have a background in TV production and hosting for other TV shows that are based on real estate. And I specialize in communications, in marketing, and social media. And my goal and objective is to help people find security, wealth, happiness using their real estate, whether it's the home that they live in or the home that they use as an investment. Tonight, we're going to go over the path to home ownership. And there's three things we're going to really talk about, and that's assessing your financial readiness, building a strong credit profile, and how to get partnered up with the right team. When we're talking about financial readiness, we really need you to look at if you can afford a home and qualify for a home. A lot of people look at the 28-36 rule. And what is this? Well, it means that no more than 28% of your take home gross income should go towards your housing expenses. So this would be like your mortgage, your homeowner's insurance, your HOA fees if you have any. And then your total debts shouldn't be more than 36%. So, that would include things like your car loan or student loans, those extra things that you have to be able to pay off each month. That way you have some money left to save, some money left to get food, get clothes, like the things you need to live off of. Now, as far as credit goes, you need to have a strong credit profile as well if you are looking to buy a property and get financing. A lot of times you're going to see interest rates advertised, and those interest rates are very generalized. They don't necessarily reflect what your interest rate is going to be. Your interest rate is going to depend a lot upon what sort of risk, like profile you have for the lender. So if you have a lower um, credit score, you are more likely going to get a higher interest rate. And what does that mean? I mean, that means that your payment's going to be higher, you're going to be paying more over the life of the loan. So these are really important things to know about. Finally, when you are looking to make any sort of real estate move, you need to have a good team. A lot of times people think that starts with the realtor, and that is definitely a strong component of it. But you also need a strong lender, somebody helping you in terms of the money aspect, whether it's a CPA or maybe it's a financial planner. All of these people can be part of your team to help you make the soundest, wisest decisions. And I can help connect you with any of those who will have good guidance, sound advice, so you can make the best decisions. Now, looking at 2025, there are some key trends to think about, and this will help you decide whether or not this is your make or break year for real estate. First of all, let's look at what's driving the market and the key opportunities for buyers, as well as the different trends for investors. So, as far as what's driving the market, I think, and many agree, that 2025 is going to be an excellent year to look at real estate. And why that is because for the last couple of years, 2023, we saw interest rates going up, spiking, getting out of control. So people were more afraid to make an investment. They didn't know if they could afford it. They didn't know if the high interest rates were going to like squash prices. There was a lot of instability. In 2024, all we were waiting for was for rates to come down, and that was the prediction all year. So rates are going to come down. They're going to come down to 5%. So plus there was an election. There were a lot of factors that were leaving people to wait and hold out. In 2025, this is a blank slate. What's great about 2025 is that there's no predictions that the market's going to crash, that the interest rates are going to come down dramatically. It's kind of just stable, which presents a lot of good opportunities. We don't necessarily have buyers waiting for this cliff for prices to fall off of, and we don't have buyers or sellers waiting for interest rates to come down. People are just in an acceptance phase. So that's what's driving the market. I think a lot of people have been stuck for a while, waiting for one high or one low. And now that it's stable, people can make sound, rational decisions. As far as key opportunities for buyers, I think what you need to focus on is areas where there is high job growth, areas that are stable as far as appreciation go, areas that have good infrastructure. Specifically in Orange County, we are seeing a ton of construction down in areas like Rancho Mission Viejo. They are adding tens of thousands of more units down there. And so that's an area of high growth. We're also seeing areas, older areas, where there's a lot of newer developments going in, where older warehouses or just older developments were, such as Anaheim and Placentia. So we are seeing a lot of that. We're even seeing that in Costa Mesa too, and even Huntington Beach. So you will see older areas that are being expanded upon. And then there's still a lot of new construction in areas like Irvine. So those areas tend to be very popular, hence the construction. And we're also seeing a trend of people that left and moved out of the area during COVID that may be coming back because there are more jobs going back into the office and more people that are, realizing that their lifestyle, now that they do maybe need to be in the office, is more suited to this environment. So we're seeing other companies relocate here, which is also bringing in more people to the area. And then as far as investors go, we are seeing a lot of investors look toward multifamily units. We are seeing them buy older units and completely rehab them. We are also seeing properties with the expansion of accessory dwelling law, unit laws. We are seeing those start to become a bigger trend where people are investing and then they're adding units to the property in order to increase the income revenue and the price point. So if they go to sell it, it makes more sense for other investors to want to buy it. And if they're going to hold it, they're able to make more money each month. Another trend I have seen is I've seen people holding on to their units. Maybe they were intending to flip it because the market might have been a little slower. They're holding on to them, renting them for a little bit, and then potentially looking to sell. Finally, I'm also seeing short-term rentals be pretty popular, and now they don't work in all areas of Orange County. In fact, it's very challenging to get a short-term permit, but we are definitely seeing short-term rentals as far as 30 days. You can do 30 days in almost any condo community. You can do it in residential single family, and people will rent them because we do have a shortage of rentals as well in many areas, at least affordable ones. So I'm seeing a lot of investors rent them out short term, but then the tenants are staying longer anyway. Now, if you're looking to build your investment portfolio, let's look at some different types of investments, analyze your budget and your goals, and really make sure that you start small and scale wisely. Don't do something rashly. So investing in real estate, it does not mean that you need millions. In fact, a lot of investors start with very little and they might borrow money from hard money lenders who don't necessarily need them to go through the whole financing qualification. They might pay more for the interest rate to resell really quickly, but you can start small and scale that up wisely. If you are able to borrow very little and do a remodel and actually profit, then you can turn that around and put it back into another investment. What you need to understand more of is looking at the different types of investments. You need to know what are the pros and cons of single family homes versus townhomes versus condos versus multifamily, even versus commercial. That might be something you're looking at too. So you need to look at the risks and the rewards and see what the return is and what your costs are going to be and what your resale costs are going to be and really analyze those numbers. You might want to work with a financial advisor on some of those numbers and really crunching it, as well as 100% talk to a CPA because there are oftentimes tax implications, income implications of bringing in rental income, tax implications of your financing, of the resale, of the capital gains. These are all factors that they weigh into your bottom line. So I'm curious, what area of investing really excites you the most? Share it in the chat. So this brings me to the part of the presentation where we are going to talk about taking action, because this is the part where you are going to start to work on your steps so you can figure out what you want to accomplish this year. You may not be buying a home this year. You may not be selling a home this year. You might just be taking those formulaic steps to getting there. But let's start to chart your course. So first of all, you have to decide. Make a decision, not the second, but start to work on figuring out what you want to invest in or sell or buy. Start to make those decisions, kind of open your mind up to all of the different possibilities and start to do like a cost, benefit analysis of these options. And then the next step is to set a timeline and goals. So suppose you want to save $25,000 to invest in a small rental property. Maybe it will be somewhere inland where you can get a condo or something for a low price. You might even be able to, do a low down payment and get a house in some areas of Southern California, just usually inland for that price point. But start looking at the timeline. How are you going to save $25,000? It's a couple of $1,000s a month. How are you going to do that? What are you going to sell? What are you going to not spend on? Do you have savings? Can you pay off a car loan and then that car loan money can go into your savings for the house? And actually, you might want to think about that because if you don't have the car loan, then you may actually have a better ability to get a better loan. So these are things that you can talk about with a planner, and also lenders, savvy lenders can actually look at the whole picture and tell you what you need to move around in order to make these things a reality. You also need to start assessing your financial situation because, again, your credit score is going to be a big part of this. If you don't know your credit score, there are lots of places you can pull them for free. You can track it. My credit card tracks mine. My bank tracks mine. I get updates every couple of weeks when it goes up, down, all around. So you can definitely track this and even get tips for how to improve it. Just bear in mind that a lender is also going to run your credit. So you definitely want to 100% have that checked. Then you want to calculate how much you can actually afford. And so for some people, it actually makes more sense to take a loss each month. You'd be surprised. Like a small loss. You don't necessarily need to have the numbers even out. Now you may though. So this is why you talk to a CPA and find out what's going to make the most sense for your taxes, for your financial goals. In some cases, taking a small loss could be worth it if you're going to have future appreciation. So these are things you want to talk to somebody about. So I would say that's one of your first steps is talk to a CPA and find out what's going to make the most sense for the goals that you set and set the timelines based on that. And then you want to build your knowledge. You want to look at the market trends and the research. And if you have questions about any market, I have the resources to pull data for you. And I have realtor contacts in all of the markets as well that can help you with finding the properties or finding the off-market properties. So those are contacts that you really want to take advantage of so that you have the right people in your corner on your team. This brings me to assembling your team. Find your realtors, find your lending partners, find your CPAs, find your tax professionals, and really flesh out that plan. And then, of course, take action. Start looking at houses. Have somebody on the ground in the other areas that you might be looking at. Maybe it's out of state, maybe it's hundreds of miles away. Have them help you, have them do video tours for you, have them send you updates on the market trends so you can really understand what's going on. And then, of course, make those offers and find out what those offers look like and what sort of things you need to know about them because it's going to be different in different states as to how offers are written and all of the different terminology. So what resonates with you most? What are you most excited about right now? I want to know. Show me in the chat. So lastly, I just want to let you know that I am happy to do any sort of consultation with you, a short 15-minute meeting to help you really lay out what your game plan looks like. It can be longer than that, but it's no pressure. Just help you analyze your goals to make them crystal clear so you actually have a plan, a framework to work with moving forward in working towards buying, selling, investing, helping a family member even. There are so many things that this can be beneficial for, and you can apply it to all areas of your life. In order to reach me, my information is located on the next slide. Let's see if I can get there. So I'm on Instagram at Realtor Holly McDonald. I am also on YouTube. You can find me there. Just put my name in. I also have a free resource that will be emailed to you to help you work on the steps that you need to take or should start taking in order to make some of this transpire in 2025. I hope it all transpires, but for some of these bigger dreams and goals, it might take longer than a year, but at least you can start to take the right steps so that eventually you can be there. So I look forward to hearing from you. I know we covered a lot today, looking at homeownership strategies and market trends and investment tips. So remember the first step. The first step, congratulations, you're here. It was deciding to even listen in and find out what might be next for you. And then also let's connect. Let's do a little session where we talk about your goals and talk about your roadmap for the future. And then if you have any questions, this is the time, go ahead and raise your hands, put them in the chat. And I'll be emailing out that free resource guide to you. And also I will make sure to update you on any other future workshops and whatnot that might be helpful to you or anybody you know. So please make sure to like and share this content with anybody that might benefit from it. And please reach out for any questions or connections that you'd like to have made. Thank you so much for being here tonight.